But today, I think we should put the focus on energy stocks, obviously rising, on oil supply disruption jitters, as dramatic military clashes between Israeli and Hamas forces are really significantly deepening political uncertainty across the Middle East and, therefore, supply of oil. But I thought we would focus in on one company, and I picked Karoon as stock of the day. It is one of the best performers on the 200 today, obviously being caught up in a lot of the rise that's happening in terms of the energy space overall, but it also had RBC Capital Markets lift its price target by 3.7%. It is also in the ausbiz fantasy portfolio, so I think worthwhile getting some updated thoughts on Karoon in particular. And for that, I will start with you, Mathan, because I do believe, just going by memory, that you have been a big Karoon fan.
Yeah.
Still are?
Yeah, look, there's no need to go anywhere else. It's the only oil-producing listed asset in our market, pretty much. Brazilian assets, and the growth play is still there. I think the energy play is still there. If you look at the top 5 commodities, baseload energy, it is dominating it, and that's oil, that's uranium, and to a lesser extent now coal. Coal used to be in the top 3, now it's pushed back a bit. But oil, I think the energy play plays out. We're going into the Northern Hemisphere winter season. The demand for energy is going to be strong, and we've seen China recovery, not like what the market expected, but they're traveling. Golden Week, there was a fair amount of travel. Planes are flying. If Chinese planes are flying, demand for oil goes up, and that's going to play through that cycle. US is holding very low strategic reserves. They've run that down, so that's going to play into the demand. At some point, they will have to restock, because they would not want to go with that kind of storage at that low levels into an election cycle. So that's coming as well, and everyone knows that. And we've already had supply side issues, and now what's happening with Israel and Palestine will add to it. I don't see that reducing it. So we've been positive because of the overall thematic and the exposure that Karoon offers, and the growth outlook in Karoon compared to most other players, and the macro favors it. The geopolitics, you don't want to bet on geopolitics, but I'm sad. It's sad to say that this is the cycle where geopolitics comes. So I think if you look at the data, economies are weak. You're carrying too much debt. Politicians are going into election cycle. Nothing like a war to distract things. So there's always geopolitics, wars end up happening around these cycles. So I'm not surprised by it. It doesn't change our view one way or another for the stock, but the macro remains positive, and the stock is giving you the best exposure in the sector.
Karoon.
This is interesting because Nathan and I share the same fundamental position, but for completely different reasons. Couldn't give a stuff about the macro. Like, I don't know. I mean, mate, you're talking about geopolitics, what you're suddenly a diplomat now. I just think investors have this. I'm not picking on you, mate, but
I agree. But it has not, as I said, it has nothing to do with the geopolitics.
Yeah.
We are going to get higher geopolitics now, right? I mean, whether it's Canada, India, all of these things always happen when economies are weak.
I just love. I think investors' overconfidence is staggering. In 2020, everyone became a viral expert.
Yeah.
For the last 12 months, everyone's become a silicon chip expert, and now all of a sudden, everyone's trying to predict all these geopolitical things. When we've held Karoon for a couple of years, it's been a multi-bagger for II funds. I own it myself. We know the company inside out, and there was a stock sitting there, completely ignored, maligned, super cheap. You didn't need to know anything about oil prices. You didn't need to know anything about geopolitics to recognize a cheap stock. And I think that's the focus that investors should have when looking at these energy companies. Forget about, I know there's a war on, I know there's stuff going on. Your ability to forecast that, even to interpret that into a stock price is nothing, it's zero. But what you can identify is a great opportunity.
Assets, yeah.
Well, the story, the setup for Karoon was classic because it was a crappy business for about 15 years, and it sat on net cash. It traded below cash backing for a long time, but I always thought management was distrustworthy, and I never wanted to touch it while management and board were in that position. The MD's son was CFO with very little experience, for example. But what you had you had board changes. So people who I had invested with in the past came on the board. Bruce Phillips came on board. Other credentialed board members. CEO left. CFO left. They had bought a new asset. So the company was completely different to what it was over the last 10 years. But investor disdain for the stock ran so deep that no one was willing to price this as a new business. And it had a new producing field. And you could see that this thing had a long operating history. It wasn't as though it was a brand new production field. You could see the cash flows just coming through, and it was very easy to value. And we thought this was potentially a $3 stock trading at $1. And I still think that's the case today, except now it's no longer a turnaround. Now you're really betting on exploration success. So the story is different. It's a hold for me now. I think if you've invested in this all the way along, as we have, you might even consider taking some profits, because you're betting on now a continuation of exploration success. Now I should add, the exploration looks very, very good in terms of geology. The team is outstanding, and if they get that exploration success, you could potentially see sort of $6-8 on the stock. But that's a different story to buying a very obviously undervalued asset, hated by everyone, to now buying an asset that is well covered, well understood, and betting on exploration.
Well, that was the question. So it's at $2.58 today. So you would be holding.
I'm holding it personally.
Okay.
But I just watch your position size. We're at the stage in the funds where we'd probably consider trimming some off the top. I must say, Mathan's been on this from the very beginning.
Yeah, I do remember.
He's been on it. But it's just interesting that our styles are so different and lead us to the same place.
Yeah. Okay.
And
so
I think that's
at
great.
$2.58, would you buy it?
Oh, look, our target is around $3. And now the brokers have come to $3.
Yeah.
So Grav's right. The market knows. The way we look at it is, it's one thing to have a value asset. You need the wind to come and hit the sail. So we are in that cycle. So I wouldn't be going out of this sector for now. And this is probably in the right place. We, even in the fantasy portfolio, we have Paladin. We had Boss and we switched to Paladin.
Brilliant.
And we have Karoon. Both of them have done really well. So the energy exposure is playing well as we thought, and this is usually the cycle where energy does well. So I'm not going away from it. I'm actually feeding into it.
Have you had a look at Horizon Oil? That's the other one.
Yeah.
Small producing fields in China, very, very cheap.
Yeah.
The China thing.
Yeah, I think it has never, the China thing has never worked in any of the sectors.
Yeah, okay.
And I've got, past burned fingers in a
too.
few.
Me too.
So you kind of be careful. I mean, Karoon, we used to call it kaboom, right?
Kaboom, that's right. That's right.
and it has the cycles, and then you get blown away.
Yeah.
So you really want to have a few ducks in line before you go into it. And for me, and when a lot of our clients, when it pulled back to around $2, we started getting in. Okay. And it's had a really good run. And I think even the brokers are now have gone to $3. I know what Gaurav's saying in the context that if the exploration works, this thing could go a lot further. Yeah. But I think $3 is a weighted risk place. So I'm happy to buy $3. But when you get to around $3, I think you want to be reducing your size.
Okay, so that is a buy?
Yeah, we have it in the model portfolio anyway, so it's not going to go.
I think it's done very well in that portfolio.
Yeah.
All right.